Welcome back to the Gold News Channel, ladies and gentlemen. Sit back. I'm excited because I have the one and only Doug Casey. Doug Casey is the founder of internationalman.com. You can go and subscribe there because they do a lot of information that you can get just about what's going on in the world at the moment. He's the author of several best-selling books, including Crisis Investing and Crisis Investing in the 90s. And my absolute favorite, which I've told Doug about, the trilogy, which is all about our hero, Charles Knight. And the trilogy is, in order, I believe, tell me if I'm wrong, Doug, speculator, drug lord, and assassin. Read them in that order, ladies and gentlemen. Speculator, whether you read it or you listen to it on Audible, it's actually the best Audible book that I've listened to in a long time, and I've now listened to it twice. Doug Casey, you've also got a podcast called, I think it's called Take on YouTube, so go and subscribe to that. And Doug, thank you so much for joining me on the Gold News Channel. I'm excited to have you here to talk about gold, precious metals, and it's a bit of a chaotic world out there. So thanks so much for joining me.
Well, it's a pleasure. I'm reaching you now from the backward but quiet and peaceful little welfare state of Uruguay, where I spend a good part of the year on my farm here.
Which is interesting. I'll get into Uruguay in a moment. But right now we are lurching literally from one crisis to another. But normally in times of crises like these, the gold price and interest in precious metals tends to get a little bit more focus. Seems to not be the case at the moment, yet the crises are increasing exponentially. Do you think that gold is playing catch up, or has it become irrelevant?
Well, two ways to look at gold. One is as a savings vehicle, and instead of saving in dollars, which is to say, if you produce more than you consume and set aside the difference, that's called savings. Now you can either save in a currency or you can save in gold. I've been saving in gold since it was $35 an ounce. That's a long time ago. At present prices, 1950 today, I see gold not as a speculative vehicle because relative to most other things, gold is reasonably priced. Unlike what it was back in 2000, 2001, when it was 250 or so. And then it was actually cheaper in real terms than it was at $35 an ounce in 1971.
Wow.
So I guess the answer to your question is yes. I think owning gold is more important than ever, but not particularly as a speculation, as a savings vehicle. If I want to speculate, I use gold stocks, which I feel are very, very interesting right now, much more interesting than gold itself. So I guess that's my answer.
Well, actually, you said recently that you have no interest in the conventional stock market, yet you just said then you're quite interested in gold stocks. So that seems to be a little bit of a mismatch there.
Well, first of all, one of the problems that we have in the stock markets around the world, first of all, the whole world is over-financialized today. Yeah. Everybody seems like they're playing in the stock market. That's a problem. I don't like to be where everybody else is. That's the bad news. But the good news is that the average person doesn't have a clue of what gold is all about, why they ought to own it. And the fund managers of the world are ideologically opposed to gold, and gold stocks are, well, they think every gold stock is in effect a penny dreadful. That means that the gold stock market, relative to other stocks, are about at the cheapest level they've been at in history. Why do I like them? Because worldwide, among producers, the all-in sustaining costs of a gold mine are roughly $1,000 an ounce, let's say. So the producers are actually coining money today, but fund managers don't care about it. Why? Well, gold mining is considered to be a dinosaur industry. People are not interested in something that's a 19th century choo-choo train industry where you're moving big yellow trucks around the dirt. Fund managers don't understand it. They don't want to own it. It seems to violate all the ESG principles, which are ridiculous and a total disaster, but have taken over the psyches of the big fund managers that control the markets. So I think that's going to change. And I'm very heavy in gold stocks right now, but they're not heirlooms. Gold stocks are not heirlooms. They're speculative vehicles. And they are, as a class, the most volatile class of securities on the planet. More speculative, more volatile, I should say, than even internet stocks or tech stocks. Now is the time to buy them for many, many reasons. So that's my answer in brief.
Doug, you said that there could be a catalyst coming up soon, a change. What do you think is, right now, I said right at the start that we're lurching from one crisis to another. What do you think is going to be a catalyst for change in the world as we see it at the moment? Or are we just going to lurch from one crisis to another?
Well, it's not just the US government, but all governments, or I should say more exactly, central banks around the world are printing money like it's going out of style by the trillions of currency units. And the US government officially states that inflation is running at 7.8% or some ridiculous number. I trust the numbers only marginally more than I trust those of the Argentine government, for instance. In point of fact, prices in the US, retail prices are moving up at well over 15%, on their way to 20% and even more. I think that there's going to be a panic into gold. It's going to be partially driven by greed, because enough people will realize that gold is the only financial asset that's not simultaneously somebody else's liability. And that's going to be very important when we get into a really chaotic environment, which I expect we're going to do. It's going to be fear and greed and, rather oddly, prudence that's going to drive lots of money into gold stocks. And it's just a teeny weeny portion of the market. So when money really starts flowing into gold stocks, as small a portion of the market as it is, it's going to be like trying to get the contents of Hoover Dam through a garden hose. They're potentially explosive on the upside today.
Well, that is really interesting because
I'm talking my book, Carrie. I'm just telling you what I'm doing. And I'm grossly overweight in gold in particular and mining stocks in general, also oil stocks.
Oil stocks, that's interesting because I was talking to someone recently who said he feels that oil will actually weaken a lot more, and that the money will be going more into the uranium side of the market. And I know that you quite like uranium.
I'm a huge bull on uranium for fundamental reasons. Nuclear power is by far the safest, the cheapest, and the cleanest form of mass energy generation. But it's very politically incorrect. So right now, uranium is, I don't know, what is it, $60 a pound, something like that, which means that it's marginal in terms of profitability for all uranium mining stocks. But I think what's going to happen is that you're going to find countries like India and China building lots of nuclear power plants. And I think the Europeans are going to get back to nuclear power. So we could have another uranium boom like we had, when was it?
Oh, gosh. Was that the early 2000s?
Yes, that's right. It could easily happen again. Uranium could surprise everybody on the upside. And of course, once again, big fund managers, ESG type people, they don't want to touch uranium stocks because they're so politically incorrect. I like to be places where nobody else is, that everybody thinks is politically incorrect and are hot potatoes.
Let's go back to what you said a moment ago. You mentioned that central banks around the world are printing money, and I often say to people, it's 24/7, just keep printing. In doing so, they continue to prop up economies around the world by handing it out, oh, the way to keep people happy is we'll give them another chunk of change and then that'll quiet them down for a little while. Does that mean that they continue to print, they continue to inflate the bubble, gold is irrelevant, and we just keep on pushing the problem down the road? It doesn't go into what I call the Greater Depression because we're just in the roaring 20s, but not 1920s, the 2020s.
Yeah, well, I think what we're looking at is, I agree, that phrase, the Greater Depression, is one that I'm very fond of, because what's coming up, I think, is going to be much worse and much longer lasting and much different from the unpleasant experience of 1929 to 1946. So where do you run? Where do you hide today with your capital? Can't be in the general stock market, which is at all-time highs. It can't be in the debt market. You can't be in bonds. You shouldn't own bonds. They're a triple threat to your capital. Interest rates, having gone down for 40 years, are going up probably to the levels of the early 1980s again. That's
Wow.
the kiss of death for bonds. Inflation's going much higher. That's the kiss of death for bonds. And of course, you have a default risk. The world is head over heels in debt, and a lot of it's going to be defaulted on. And of course, that's the reason. Those are three reasons why you don't want to own bonds, but those are also reasons why the central banks of the world are going to keep printing money, because they realize if they stop printing money, that the whole house of cards could collapse. So it's possible that we could have an accidental catastrophic deflation. But if they can keep control of it, they'll just keep printing and hope that magic happens. Friendly aliens land on the roof of the White House and present them with a magic solution or something. But that's what I think we're going to see. They've painted themselves into a corner, and we've reached the 11th hour of the longest artificial boom in history. So hang on to your hat. I'm not trying to scare people. I'm just trying to say that in the real world, actions have consequences, and we're living in a dream world. Take the United States, for instance. For decades, the major export of the United States hasn't been Boeings and soybeans. It's been dollars. We print up trillions of dollars, and those nice foreigners accept these fiat paper currencies. And at some point, they're going to realize they're accepting hot potatoes, and they're going to start dumping those dollars, and it's going to be a disaster because the U.S. doesn't really produce that much anymore.
Can they afford to dump the dollars? I mean, they've got that. You're right. I agree 100% with you that the US's biggest export are what I call the funny money, the US dollars, around the world. But how do we get around that? Now, we've got Russia turning around and saying that they're going to deal with rubles or gold with China, I understand. Is that changing the game a little bit, Doug?
I don't believe most of the reporting from most governments, but it seems to be a fact that Russia has been a consistent buyer of gold for many years now. China is not only the world's largest gold producer, but the Central Bank of China has been growing its reserves. And when you go to China, there are gold shops absolutely everywhere in every city in China. The average Chinese person saves in gold. So I actually think that simply because none of these governments trust each other, none of them trust each other's currencies. Yes, their central bankers are deluded and stupid on a basic level. But I actually think that just because of a lack of trust, people are going to want to hold a financial asset that's not the liability of some other government. And of course, the Russians have found recently how dangerous it can be to deal in dollars. Actually, we're going to start dealing in gold. That's a prediction. It sounds like a radical prediction, but I think
Yeah, that is
just
a
reality.
radical. Yeah, that's very radical. And I was going to say to you, is this the catalyst? This is this the start of the change? The Russia-Ukraine challenge, is that the start of the change? And do we actually move to gold, or do we move to something like a digital currency like Bitcoin? Because we all know the central banks and governments are going to be looking at digital currency or digital coins, whatever you want to call it. But do we move to Bitcoin as a store of value, if you like, and a way to not have a liability rather than gold? In other words, is that a threat to gold?
No, it's not. They work hand in hand, actually. And one of the good things about Bitcoin is that it's introduced people to the concept of fiat currencies. Most people have never thought about the problem of governments controlling currencies and using currencies as a way to finance themselves. But now owners of Bitcoin have had to think about this, and they realize that one of the advantages of Bitcoin is that its quantity is limited. And I was the late adopter to Bitcoin. I was first introduced to it at $13 a Bitcoin, and I was given a physical Bitcoin. They exist, incidentally, or used to exist, which I still have in my safe deposit box at $13.
Let me stop you there, Doug. Yeah, sorry, a physical Bitcoin. So does that have like code on it or something? It's not just because.
Exactly. It looks like a coin, but it's got all the code on it for that particular Bitcoin. Exactly.
Wow.
So I bought a European friend of mine lunch, and he said, look, I'd like you to have this Bitcoin in exchange. I said, oh, sure, I'll take it. I didn't understand the value proposition for Bitcoin. I look at things from a fundamental point of view. And it was Aristotle in the 4th century BC. I'm not trying to be pedantic, but let's get down to basics, who analyzed what makes a good money. What are the characteristics of a good money? A good money has to be durable. That's why we don't use wheat as money. It's got to be divisible. That's why we don't use artwork as money. You can't make change for the Mona Lisa. It's got to be convenient. That's why we don't use lead as money. It's got to be consistent. That's why we don't use real estate as money. And it's got to have some kind of use value, some kind of value in itself. And that's why I hesitated on buying Bitcoin. I couldn't figure out, well, what's its use value? And then I realized, wait a minute, Bitcoin is actually a transfer mechanism. 75% of the world's population live in countries with blocked currencies, things like kwaches and pulas and dirhams and pesos that are worthless outside of the geographical jurisdiction of the government that issues them. But with Bitcoin, if you can tattoo the code for it on the bottom of your foot, you can go anywhere and take your wealth with you. So that I think that Bitcoin has a real place in the world's monetary system, along with gold, and they go hand in hand with each other. One for the digital economy, one for the physical economy. So I'm a big bull on both of them. Although I've got to say, well, is Bitcoin cheap right now? All the Bitcoins in the world have a market cap of about $1 trillion. But that's really not much when you consider that all the gold in the world, there's probably about 6 billion ounces of gold in existence. Gold has a market cap of $12 trillion. All the stocks in the world, over 100 trillion. All the bonds in the world, 120 trillion. So I'd say in this world, as valuable and unique as Bitcoin is, yeah, I think it can go higher, and I think it will. And I own Bitcoin. I own a lot of Bitcoin.
You mentioned bonds just a little while ago and the bond market. What do you think will happen if or when the bond market crashes? And potentially what will be the catalyst for that?
Yeah, well, what's happening is this. Interest rates are at all-time lows, which is rather unbelievable to me. In fact, something metaphysically impossible, or I thought was metaphysically impossible, has happened with interest rates and bonds. Interest rates went below zero, which actually amounts to a tax on the part of central banks against the people that own bonds. But here's the point. If most government bonds yield 2 or 3 or 4% or whatever, depending on the currency you're looking at, and inflation worldwide is running 15, 20% and going higher, eventually it's going to occur to these stupid fund managers that run insurance companies and pension funds that they're holding onto hot potatoes in the form of these bonds where they're being paid a couple of percent and they're losing value for the 3 reasons I mentioned earlier on bonds. You could find bonds being dumped wholesale.
Wow.
And where is that remaining money from the dumped bonds going to go? I think a lot of it is going to flow into gold.
Wow.
I don't think it's going to flow into the stock market, which is grossly overpriced. I think we've already entered a bear market in the stock market, actually. Yeah, it's going to be gold.
But you say that, Doug, but you're still very bullish on gold stocks. So the stock market as a whole is overvalued, but certain sectors of the stock market potentially are undervalued. Is that what you're saying, just to be clear?
I think that's exactly correct. Let's take oil, which oil stocks, much bigger sector than the gold and mining stocks. Back in 1980, when we had our first really gigantic, everybody had to own an energy stock, an oil stock back then. 35% of the S&P 500 were oil or oil-related stocks, 35% of the S&P capitalization. Now, what is it? About 3.5%. It's down 90%. So oil remains an excellent bargain. And even at, what is it, $95 or something like that today, yeah, I'm still bullish on oil, because if we go into a massive depression, which we've entered that already, but yes, a lot of oil usage, people will economize oil. Yes, that's true. But at the same time, governments all want to be green. They're building these stupid, uneconomic windmills and solar. I'm all for windmills and solar, incidentally, but only in remote and selective and peculiar locations. They're fine. But for mass power generation, forget about it. So I think oil could go a lot higher because it's a political thing. And in a chaotic political environment, you could find tankers stop plying the waves, and yeah, there could be oil could go a lot higher, much higher than its previous peak of 140. So I like the oil stocks, not at big oil companies, because these big oil companies are so stupid. Shell and BP actually announcing that they want to get out of the oil business. I look at the secondary ones that are run by entrepreneurial managements and are producing oil and making a lot of money. But as I said, the junior gold stocks that are producers, I'm not necessarily talking about explorers and developers, and I play in that game quite a bit. But the producers are actually coining money. They're making $1,000 an ounce, and the fund managers don't care, and the public doesn't know anything about them. So there's going to be a panic into gold stocks, I think. And I think that market as a whole could go 10 to 1 from here. Even if the market crashes, yes, gold stocks are stocks, and you sometimes throw out the baby with the bathwater, because gold stocks will have a bid, but it doesn't bother me.
I had a question from a client, and I'm going to put it to you, Doug, and that was that he was a big holder of silver. He bought it at X price. He wants to sell it. The spread from when he buys it from a dealer and then wants to sell it, he said, I need to sell it. I need to have some income, but I'm losing because of the spread from buying it and then selling it. Is there an answer to that at all, or as to the best way of when the time comes of them being able to do that? I didn't know what the answer was. So I thought, I said to Paul, I said, I will put it to Doug Casey and see if he's got an answer. Is there an alternative market, I guess?
Well, like I said, I've been buying gold and silver coins since my financial day one. Haven't sold a one of them.
Wow.
And I'm not planning on selling them until I see Slime or Newspeak magazines, if they still exist by then, running a front cover with a golden bear tearing apart the New York Stock Exchange. And at that point, I'll be selling my gold and buying things like Berkshire Hathaway and other blue chip stocks, which I expect will be relatively much lower and gold much higher. So you, first of all, you should buy these coins for safety and security and prudence. They're not trading vehicles. They shouldn't be at this point. So don't think of selling them. And frankly, silver coins, like these 1 ounce silver rounds that all these, koalas and kangaroos and beavers and what have you. Generally speaking, let's say silver is $25 an ounce, which it is right now, roughly. You have to pay 30 or 32 for a 25, don't worry about selling them. The problem is going to be being able to buy them and take physical delivery at a reasonable price. So don't get panicked about that. Buy them and put them away until you can dump them all for real bargains, which will occur at some point, in the not too distant future, I suspect.
So what you're saying is hold your precious metals for the moment, because we are going to come into a catalyst for change, which will mean some other assets will become extremely cheap. It's at that point that you switch it over. Is that what you're saying?
Yeah, exactly. And unfortunately, in the electronic world we live in today, and Bitcoin is somewhat exempt from this because of the blockchain technology, but I question the degree to which you actually own anything today, because the prime directive for all living beings is to survive, and that includes governments. And if governments have to tap your wealth, tax the assets in your stock accounts or whatever, they'll do it. But the nice thing about gold and silver coins is that they are completely private. They're in your own possession. So it's really hard for government to try to take those away from you. That's another argument for owning those things, because we live in a world where most governments and really all central banks are bankrupt, and they'll do whatever they have to do to keep their heads above water. And that is not a good thing for the average citizen.
That's right, because tax will be. I'm going to listen. The last word to you, Doug, is going to be, you said recently, and I think this is something not recently, you probably said it for a long time, physical gold should be the foundation of your wealth. You stand by that mantra. Why the physical gold? We talked about stocks. We've talked, there's ETFs as well. There's different ways of holding precious metals. Why physical gold? And does that include silver? Why should that be the foundation of our wealth?
I'll say it again. These are the only financial assets that are not simultaneously somebody else's liability. They're completely private, and there's plenty of reason to believe that the public is going to get a comeuppance, and they're going to try to figure out, where can I go? Where can I run and hide? And they're going to go to the precious metals. So that's why it's the foundation. Other things I speculate in. I consider myself to be a speculator, which is to say someone who takes advantage of politically caused distortions in the marketplace, of which there are more and more. But the foundation is gold and silver coins. In case everything else goes to hell in a handbasket, I probably won't be sleeping under a bridge if I've got those things.
Doug Casey, it has been an absolute pleasure to chat with you today. Now, how can my beautiful community out there connect with you and read your writings? I spoke earlier, and by the way, I'll say it again, speculator, drug lord and assassin. Go get those books. It's all about our hero, Charles Knight. And I believe there might be another one coming up as well. But first up, how can they get a hold of some of your writings, subscribe to what you do?
Well, I don't have a paid newsletter, but we do a free blog called internationalman.com. Opt into it and you'll find some excellent articles. I do one a week myself. Number one. And number two, I have a podcast on YouTube, at least for the moment, we're still there, called Doug Casey's Take, where we cover the waterfront, and people like it. So those are the two things other than the books.
All righty. Well, and is there another book coming out at the end of this year? Did I hear that in the wind?
Yes, because my series of novels, and there are going to be 7, incidentally, of which 3 have been written, is what we're trying to do is reform the unjustly besmirched reputations of increasingly politically incorrect occupations. That's a mouthful, isn't it? So after our hero, Charles, becomes a speculator with a gold mine and a bush war in West Africa, and it is a great book. I love it. And he becomes a drug lord, where we reform the reputation of drug lords and the drug business, legal and illegal. Then he becomes an assassin because he comes to the conclusion that there are some people that just need killing. And we examine the morals and the ethics of, dare I say it, political assassination. And of course, naturally, he's accused of being a terrorist, which is a danger for all people that have free market beliefs today. So our upcoming book is called Terrorist. And then it gets more radical from there with books 5, 6, and 7. Number 5 is Warlord, where Charles goes back to Africa, and we show that a warlord can be a good guy as he turns a shithole country in West Africa into Singapore on steroids. That's been my hobby for many years, but that's a different story. But those first 3 books, thank you for plugging them, Carrie. I appreciate it. They're good reads.
Well, listen, I didn't have to plug them. I absolutely loved it. And this is a gold community out there. Speculator is all about a gold, but it's fascinating. And it's just so interesting to get your head around some of the things that happen. So Doug Casey, thanks for joining me on the Gold News Channel. Let's have you back again soon. And thank you very much for joining us.
Pleasure. Thanks, Carrie.